Now, this morning, the JSE Top 40 opened down 0.56%. Now, this came as a result of the CPI figures that obviously we saw coming in the US yesterday. I mean, most of you already know that analysts were expecting the CPI figures in the US to come at 6.2%, which obviously we saw the CPI figures coming to 6.4%. This meant that it came out worse than what analysts expected, which is something that obviously was not good to the market, which is why we saw the markets like the top 40 plummeting or ending the day on a red, and also starting today on a red, simply because of those CPI figures. Now, ladies and gents, today we got to see the CPI figures or the inflation figures for South Africa, and boy, I must say, I was really excited about the numbers, because I was expecting the numbers to be, of course, worse than what analysts expected, like what we saw in the US yesterday. But boy, I must say, it came out at the exact figures which analysts expected, which is something that must just show you that recovery-wise from inflation, South Africa is doing really good. Recovery-wise, when it comes to the cost of living, SA is improving, and we are getting closer to the target by the Reserve Bank of between 3 and 6%, because you know that once inflation gets to that point, ladies and gents, then interest rates are not going, or chances are very slim or low that we get to see the Reserve Bank of SA increasing interest rates. Now, you will know that just now in Jan, we saw, of course, the SA Reserve Bank increasing interest rates by 25 basis points or 0.25%. Now, you will know that the reason why the Federal Reserve, the central banks, continue increasing interest rates, it is to bring down inflation. Inflation, it is a problem in a country, because it means that the things, the products and services that we use on a day-to-day in terms of prices are very high, or get to a point where most of the people can't afford the day-to-day products and services that they use to afford a year ago, 2 years ago. So the job of the Federal Reserve or central bank increasing interest rates is to make sure that we continue affording the things that we were affording 2 years ago, 3 years ago, which is why they increase interest rates, so that the demand into those things can come down, and those producers or the manufacturers of the products we use, the manufacturers of the food we eat, then they bring food prices down, the products of things down, which then will result in, of course, consumers or all consumers affording most of the things that you find at your Pick n Pay, ShopRite, clothing shops, and all the other things that we use on a day-to-day. Now, high inflation, you will know that it has a very bad impact into stocks, because when prices of things go higher, then obviously people, a lot of consumers, are not able to afford certain products and services, which means that companies won't generate as much revenue as they were generating due to the consumers not being able to afford certain things. Now, to get to see that inflation, it is coming down, it means that the products and services of things that we used to buy or we are buying are also coming down. I mean, one of the things that I personally think that it really boosted the SA inflation figures for the month of January, whereas of course the petrol price decrease we saw early January, which is something that obviously it plays a huge role into these CPI figures or into the inflation numbers. Now, before we dig deep into this video, before we forget the house rules, you already know that this video is just an entertainment video and not a professional financial advice video. I really appreciate if you can just hit the like button if you are enjoying the content that I'm giving you about the latest results or the latest developments around inflation or the cost of living in South Africa. Now, before wasting any more time, still on the screen you'll notice that in South Africa, analysts were expecting an inflation in January to come at 6.9%, which, ladies and gents, still on the screen, that's exactly what we got to see today when the inflation numbers came out. Inflation came out at 6.9%, which was better than the inflation we saw for the month of December, which was sitting at 7.2%. This is something that is incredible and something that really made me to be excited, because it looks like also inflation in South Africa, it is on a decline, and the fact that now we are at 6.9, it makes me to be really excited, because you'll know, or as I said in the beginning of this video, SA Reserve Bank is targeting an inflation in SA of between 3 and 6%. Now, the good thing which I just read about South Africa's inflation is that ABSA just yesterday released an article which, to me, I was really excited after reading that article, because on that article they indicated that inflation in South Africa could come within 3 and 6% in the second quarter of this year, which is something that is incredible, ladies and gents, because then that would mean that in terms of rate hikes, we might not see rate hikes from Q2 going to the next month, which is something that is good, because this just means that we might not see rate hikes or the Reserve Bank increasing interest rates from Q2 going to Q3 and Q4, due to the fact that the way inflation will be within their target. I'm very excited, or I was very excited when I read that article, and it is looking really positive, or things are looking positive, because I mean, right now we are at 6.9%. Last month, or for the month of December, inflation came at 7.2%. So it is progress, or we are seeing sort of like a deflation, which is something that is incredible, because like I said, this is something that will make the Reserve Bank maybe to even start about decreasing interest instead of increasing interest rates, which will be so good to consumers, as so many people are crying about interest rate hikes, because there are long-term loans, or house loans, car loans, which they have, credit card loans, their repayments is quite high, which is what is making a lot of consumers to be uncomfortable, obviously, or being unable to fulfill their obligations, and that is of paying their loan. So I'm very excited, and of course a decrease in interest rates, or not seeing an increase at all in interest rates, will be very bullish to the markets, which is why I'm very excited. In fact, I'm thinking of now loading the boat, or start thinking around, or loading the boat, or adding more shares, or buying new shares, adding them to my ZAR portfolio or local South African portfolio, because I know that obviously if we are to get to see inflation within that 3 and 6%, then it's lights out. We might see a lot of SA stocks recovering from, of course, the crash that we've seen maybe in some of these, or from some of these stocks, which obviously will be so good, because they will recover also in terms of the share price, and will generate some good returns. So I'm very excited about the 6.9% we got to hear, or we got to see today, SA announcing for the January inflation figures. Otherwise, if you enjoyed this video, don't forget to hit the like button, comment, and subscribe. And once you subscribe, don't forget to hit or click that notification bell, so that at least you get notified by YouTube every time I drop a new content. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey. And it is important that before you buy any shares, you do your own due diligence on a company which you want to buy, so that at least when you see sharp falls, sharp drops, you don't get panic and sell good quality stocks. Otherwise, that's all from me, and God bless you all.